Hello, hello. Good morning, everyone. Actually, it's afternoon now. Yes, it does. I got a text. Telegram. An email.
Good morning, everyone. Oh, let me get in here. Why am I so far out? How's everybody doing today? Hey, Robert. There's two Roberts in here. How are you guys doing? Hope everybody's doing well. Gary, wow, two Roberts. There's three Garys and a Mark. Look at that. We got a pattern here.
Yeah, triple Roberts.
Triple Roberts. Triple Roberts. Double Roberts, triple Garys. How are you guys doing? Welcome, welcome, welcome. If this is your first time in the program, welcome, 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 welcome. We'll be starting in about 4 minutes. We have a lot to talk about today. Somebody asked me yesterday, and I guess I should wait a little bit. Pear Tree, hey Todd, how are you? Donna, how are you? Adam, how are you? Good to see you. Good day, Steve. How are you? Hope everybody is doing well today. What a market. Did anybody take the Oracle trade I gave you guys this morning? Oh, look at that, Bruno.
Nice.
Good. Well, I gave you that trade at when Oracle was at. Let's see here. Hey, Mike, welcome. If you made money on Oracle, let me know. I gave you that trade at 10:01. At 10:01, it was. Let's see here.
Telegram.
No, at 10:01 a.m. on Telegram. 10:01. The stock was at 105.85. The stock now is at 104.10. Good. Go ahead, repost that. Hey guys, if you're not on my Telegram channel, I give free trades there. And they make money too. Hey Ann, how are you? Feel free to join my Telegram, and if you want to get free trades, Norbert, good. Put that on there, Matt. Good, 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 good. I usually don't put trades there unless I'm very, very confident about those trades. Now, again, I could be wrong, but those are the trades that we put on there. We'll be starting in 2 minutes.
There's the link for the Telegram.
All you need to do is sign up for Telegram. It's free, and then just click the link in that, and it'll automatically sign you in. Hey, Ann, Brett, Valerie, posted in Telegram. So let me just show you what I posted in Telegram last couple of days. I gave you yesterday, talked about Carvana, hate that stock. I gave you a FedEx long, I gave you a Target short yesterday. And this morning I talked about Nike, consumer staples. I gave you NVIDIA and Tesla this morning, and I gave you a trade on Oracle. That's in the last 24 hours. Good, Ken, no problem. Scotty, how are you? All right, we got a couple of minutes. Before we start, I want to, good, Todd, good. If you guys are making money from these trades that I give away gratuitously here, please post. But you should have made over $1 on Oracle. It's at 104.60 now. We gave it at when it was closer to 106. We all need to discuss Carvana with a therapist. Oh, tell me about it. Man, oh man. Ross Store, I'll talk about Ross. I saw Ross Store on my scanner today, so I'll talk about it. First couple of things I want to talk about. Just give the room a few more minutes to fill up. Good, Mark. Good. Let's look at Target. Target is down $1.21. I said to short it yesterday. How could you be down on it? Not yet, but as soon as NVIDIA gets it up, yes. Good. All right. So you're welcome, BB. You're welcome.
Is that ticker Consolidated Edison?
Yeah, ED. Okay. So First things first, somebody sent me an email yesterday, and I want to make sure that we're all on the same page. So basically the email was, Roger, can you look at some of my positions? Well, I started responding to the email, and then I noticed the majority of the positions were from the VIP room. And so instead of responding, I fully responded to the question, but I never sent it because I wanted to know where the client. Good. Go ahead, Matt. Go ahead and repost it.
Yep.
Yeah,
I'm watching them.
Good. Thank you for doing that. So thank you, Dickens, for posting and sharing. And I think there's still some money to be made in Dollar General. So I looked at the trades and I noticed that most of them are from the VIP room. Not all, but most of them were from the VIP room. And most of them were 5 days old, 8 days old, 10 days old, 6 days old, something like that. And I looked at them and they look like they're starting to come off of their breakout. So I want to make sure you guys understand how to take advantage of the trades that I give you. I usually give you several signals and several trades while we're here. The trades that I'm giving you in this room, and you might or might not have noticed, I'm only giving you breakout and breakdowns. I'm not giving you pullbacks because pullbacks are a little trickier, especially for folks here. I need to kind of monitor those. But when I'm giving you breakouts or breakdowns, okay, those trades should continue to be in motion. If those trades stop moving, you need to get out of them. Day or two max, get out of them if they're not moving. Those are continuation trades. They're supposed to continue moving in your direction. If they go against you, don't sit there and say, ooh, where do I get out? I'm just going to hold it. It's going to continue. No, it won't, or it shouldn't. And if it is, you're lucky. You're gambling. Don't do that. Don't give these trades too much rope. Give these trades 24 hours to prove themselves, maybe 48 hours to prove themselves. If they're not continuing, they're not going to continue. Then that means momentum is over. Funds are not interested anymore. Game over. They're designed they're designed for trades that are in motion. And if a trade is not in motion, notice I'll give you an alert level. I'll say when it goes up here, you buy, and I won't give you an option because I know if I give you the option, you'll forget selectively that I said don't get into it right now. So the point is, the trades that I'm giving you here live, not in the members area, here live, are momentum trades. They're supposed to continue moving. If the stock is not moving, I'm not going to give it to you. So if it doesn't continue moving, there's no reason to hold it. So don't send me an email from stocks that I'm giving you here a week before and say, Roger, can you look at my positions? I will, and I'll tell you to liquidate each and every one of them because there's no reason to hold them if they're not moving. So just want to make sure we're on the same page. We're looking at parabolic moves. Now, first things first, let's talk a little bit about the market. Exactly, Gary. Thank you. These are momentum. They're supposed to continue giving you momentum. If there's no momentum, then party's over. Again, not instant momentum, not on a 5-minute chart, but at least on a daily, If it's not moving anymore, especially if the market's going your way and if it's not giving you relative strength, there's no reason to be in the stock. I'm identifying stocks that hedge funds are buying, that momentum is moving into, that big money's moving into. If it stops moving into it, what the hell do you need it for, right? So again, just want to make sure you guys understand that. So let's talk a little bit about the market before we get into the nitty-gritty. And all of you guys are bringing up very good points here. I like that. So the S&P looks like it really, really wants to go up, but it's not. It's moving down, and this is a breakdown here. I'm even more convinced now that we are, in fact, going to go to the 200-day moving average. Yes, Susan, Meta's going up, not down. We rode a put on it yesterday because it had very strong relative strength, and so did NVIDIA. So does NVIDIA. So you notice the Dow is at the 200-day moving average. Typically, we hold the 200-day moving average, and we have very strong support here. We're probably going to end up holding this for a couple of days. That's a strong level. The problem is, if you look at the S&P, or the QQQ in this case, I don't look at stop. Okay, here's a great question. Joe, let me first do this and I'll answer your question. This is not happiness right here. This is a breakdown. Do not like this. Do not like this. Be very, very, very careful here. Be very careful. Now, it still is a two-sided market. If we continue moving in this direction, it's going to be bear. shorts only, or bulls, that the type of bulls I'll show you in a second. Okay. So below the moving averages, give me that home builder tech sector again.
XHB.
HB. I always confuse it with biotech. Not good. This is not good. So I would say the market has a 65% chance of going lower and about a 35% going higher based on my analysis. Now, Joe, let me answer your question. Options for such a short date, what is the percentage of stop loss you use since the R sub dollar be prepared to have 100% loss? Joe, I don't ever look at P&L when I'm trading. Let me ask you guys a question. When you get into a trade, are you looking at your P&L or are you looking at charts? Good question for everybody here. What do you look at? Charts. Does anybody look at P&L where you're entering? Charts. Everybody's looking at charts. Why the hell do you all of a sudden decide to stop doing that when it's time to exit? Charts, right? But why does everybody start looking at P&L when it's time to exit? Am I onto something here? Everybody's a technical analyst till it comes to getting out. Then they become accountants. Have you noticed that, Matt?
Yeah, I have.
Here's a tip for you guys. When you get into a stock or an option, you get in with a chart. When you get out of a stock, you get out with a chart. A chart. If I didn't do that, do you know how many more losers I would take than I would have to? That's not the point, Cyrus. The point is, folks, what they do is they get into a trade and they start looking at the charts to get them into the trade. When the trade goes against them and or for them, they start looking at P&L. It's called human nature. That's how I'm so definite that it happens, because you got to keep looking at the charts. Don't look at your P&L. Your P&L will screw you up. It'll misguide you. It'll tell you wrong information. Don't ever look at your P&L to get you out of a trade. So to answer your question, Joe, and it's a good question. To answer your question is, you look at the same thing. When you get into a trade, you put a stop loss level there. When a chart goes below that level, you get out. I don't care if the option's down 100% or if it's down 10%. Don't look at the P&L. The P&L will screw you up. All right? Ken B says, on Carvana system, the red of the first trade we now need can be a grind. You're absolutely right. Also, Ken, in my defense, I told you guys not to place big trades and to paper trade till I start, and I wanted to explain to you the tier 1, tier 2. So, but you're right, Ken. You're absolutely right. You're absolutely right. Get out based on the plan you got. Yes, exactly, Dan. Joe, Matt and I have a different opinion on that, okay? So Matt says he likes to keep it if it only has 10 cents left, regardless, but I say to get out. So we have a different opinion on this. I'm going to prove to him by doing some statistical analysis there is an advantage of getting out, because at least it frees up your mind. But that's a good point. That is a good point, and that's something that me and Matt, we constantly butt heads over it. Because let me show you. Let me show you. This morning, let me just show them what we were talking about. Okay. This morning I had a beef with Matt. I said, Matt, look. And a good way, let me give you another mental trick. A good way to forget about a current trade is to get into another trade. Switch trades. That's a good way to forget about a current trade. So Visa. So I said, Matt, let me ask you a question. I got a beef with you. Tell me, Matt, if there's anything that I'm saying right now, it is off 1% based on our discussion this morning.
Okay.
I called him to my desk and I said, Matt, look, why didn't we get out of Visa when we broke the 50-day moving average? Why didn't we get out of it right here? Right here would be a good exit. And he said, you know what? When it was down here, the stock was already down so much and it looked like it was going to bounce over here.
That candle, yeah.
Yeah, and then when we got here, it was too late, so I just decided to hold it and may bounce off the 200-day moving average. So what I would do is I would get out of this trade right here, right there. Literally, well, actually no, like right here, below this bar right here, right there. But he wanted to wait because he thought it was going to bounce here, and now we're stuck in it. Now, he could have been just as right, and I could have been wrong. This is all hindsight, Monday quarterback nonsense. But I wanted you guys to explain that there's always you're never gonna see it. And here's the thing: 50% of the time he would be right because 50% of the time they come back. So,
Do I get to go now?
yeah, go ahead, please.
Okay.
Did I say something wrong?
Uh, the only thing you didn't point out is we got in at the second red candle. So from the high, second day on the pullback, that one right there. We got in here. Now we rode this. You said you would have got out 3 candles later when I hit the 200-day moving average. The problem is that based on the trade theory, pullback from a swing high, we're still range bound. Like it's an inside day versus the first candle from the pullback, which every other time we stay in because the trade, especially if it has relative strength like Visa, it's the first thing to go back up. The options we're using are so sensitive that as soon as we had that day right there, we're down 80%. But our winners used to be 20%. Now our winners are 50 to 100%.
Yeah. I'm just look. I'm just sharing. Somebody, I hear you. I'm not disagreeing with you. And I even said 50% of the time it'll come back, especially if stock like Visa. If we have more time left, I get it. We're swing trading. We're not day trading. It's all good. But again, there's no right answer. There's no right answer. Yeah. But again, the right thing to do would have been to liquidate it right there. The proper thing mathematically to do would be to liquidate it right here. But again, what is it? Rado says historically, what are the chances of a stock to bounce or break when it hits a moving average? It just depends on the stock. It depends. It's not a clear statistical thing. It doesn't work that way, Joe. It just depends. But I will tell you this, they're very high on the 200-day, less so on the 100-day, and less so on the 50. Much higher on the 200-day. Much higher on the 200-day. And by the way, we had volume was all red going down here as well. That was another tip off that I didn't even mention. But again, it's in hindsight, we're all brilliant. Well, we're still holding it, Theodore. You don't have to, it's not crazy. We're still long the stock. When's their expiration, by the way?
I believe that's
so nothing to be crazy about. We're still long the stock.
got 2 weeks on it.
So we got good time. Thank you, Val. Doing all right, Art. I think you missed the conversation we had on Visa. So again, that's where we're at right now with the market. So a couple of things. Consumer sentiment. Consumer confidence, not sentiment. Consumer confidence came out at 103. Now, to give you some perspective of where that was, I learned yesterday from talking to Art that Art's been using TC2000 for 20 years. It's great. Glad that some folks here use it. So here's the consumer confidence. Came out at 10 a.m. Didn't really move the market much. They were looking at 105.8. They got 103. Then we had new home sales. There you go, Adam. The number was also on the lower end of the expectation. So it didn't really give the market much of anything to hold on to. It didn't, unfortunately. The market right now is in an influx. Now, what am I looking for? What are the clues that I'm looking for to see when we're going to bottom out? First thing is, if you look at sectors that have been leading, that's what I'm saying. That's why we still have it, Cyrus. That's why we still have it. But when I'm giving positions on these trades in this room, those are all momentum trades. Those are yay or nay trades. Those are not, let's see what happens and wait. So yesterday I wrote you a telegram about the consumer discretionary sector. And in light of the fact that Nike's having earnings, I think tomorrow, if I'm correct, after the closing bell, don't, I may be off, but what? FTC sued Amazon? You mean we're not the only one who was had an action? They're suing everybody. They're going nuts. Thursday, Nike. Exactly, Adam. So the stock keeps going down, but the consumer discretionary data is not all that great right now. And if the consumer discretionary data is not all that great right now, Let me just look at this here. Utilities, energy, healthcare, consumer staples, financial, communication, and Dow Jones. The only tech sector left standing. Exactly, Bodine. Yes, Jeff, it does. XLC is still standing. So Google and Meta are still doing okay, but the other tech stocks are not. Mid caps are showing some strength, but look down here, technology, QQQ, retail, consumer discretionary. That's exactly what they do, Bodine. That's exactly what they did to us. I could tell you horror stories. Horror stories. Retail's looking bad. Tom, it was for stealth surges. V was for stealth surges. We're still long the stock, but we did make up for it by taking a 100% gain on a stock the other day, right, Matt?
Yep.
Okay, so we redeemed ourselves so far. So try to stay out of retail for now, consumer discretionary for now, small caps, the QQQ if you can. Real estate is dangerous, and again, technology. Try to stick with bluer chip stocks, financial, consumer staples, healthcare, energy. Also, be very cautious with consumer staples because you want to write down what I'm about to tell you. Trust me, you want to write it down. TLT has moved down. This is the long bond. And if you were in my intro to algo class, I actually talked about this. This is a breakdown. Although I don't think we're going to go much lower. Bonds tend to be a reversion to the mean market. But this right here is very bad. And what this is doing, it's causing the consumer staple sector. Let me show you. What happens when interest rates goes up? What happens with food prices? Consumer staples get more expensive. What happens with real estate with interest rates go higher? Yep. Down, 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 because it's more expensive. So you see the problem I'm having with these two sectors with real estate and consumer staples? Be very, very, very careful. Dave, that's not true because because food is a much bigger commodity than anything else. And interest rates have you see, Dave, interest rates have an indirect relationship to consumer discretionary stocks. It's like three away. Higher rates, companies have less borrowing power. They pass it on to you. Their loans are more expensive. They can't spend as much money. It's like three deviation. Consumer staples is just really simple. Corn goes up when interest rates go higher. It's simple. They charge you more. The more carrying cost. It's direct. It's a direct relationship. This is the 200-day moving average. This is the 100-day moving average, and the blue is the 50-day moving average. So wanted to, autos as well. But the biggest things that have a direct correlation to higher rates are lower prices for foods. I mean, higher prices for foods, which causes the index to go down, and real estate right away. It's direct. Food and housing, direct result. So always keep your eye on that, and something you may want to make a note for yourself. It's actually pretty important. All right. So market, much more bearish bias than a bullish bias. Be very careful trading this market right now to the upside. Only trade stocks that are super, super strong. If we have a reversal to the upside, the market's going to react very sharply. Now I want to show you something. That's a good idea, Cyrus. So take a look at this stock right here. See what the volume is right now. The volume for the stock is 1,000. Hold on a second. Today's volume is 1,000% of its average daily volume. 1,000%. 1,000. 1,000. Let's go back and see if this stock has ever been at this level. Oh, interesting. Back in, what's this here? 2021. Yes, Yes, Bodine. Yes. Currently, not even just right now, up to right now, in the day. Can you imagine that? So going back a year, let's just go back a little more here. Let's go back to where this happened. Man, oh man, right here. Stock has a gap right here, had a gap between 30 and 38, right? And the peak here is about 42. This stock right here, honestly, Dan, it doesn't make much of a difference. I've seen folks use 50, 30, 20. I think 30 is just fine. It's not going to be all that different. I've tried. It doesn't. Anything over 2 weeks is fine. But I think 30 is a good balance between 50 and 20. Because volume, unless something's going on, it tends to be pretty consistent. Good, Bruno. So how many of you think this is way overdone and it's not going to move anymore? Probably a lot of you, right? I'm going to show you guys something. Still moving higher. IMVT. The stock is still moving higher. Now, look at the S&P all day and look at this stock. Let's just say hypothetically that the S&P decides to come up a little bit. Yes, Art, very seriously. Very seriously. What do you think will happen right now if the S&P starts going up? What do you think will happen to this stock? Exactly, Adam. That's all I'm going to say. I'm going to leave it at that. Cyrus, Adam, you guys got it. Take off. What about, but Roger, the stock gapped $10 and then it went another $10. How could it be? Why would you look at a stock? All my oversold indicators are telling me it's overdone. No, the funds don't want to buy it. They're looking at the RSI. No, they're not. No. Do you know that professional traders don't use words like overbought, oversold? It's gone up too much. That doesn't work that way. If the stock market moves up right now, this stock, by the way, we got an entry signal on it at 37.26 today, Matt. We're just now past our first target. Second target's at 42.40. But the point is, there's not a lot of support here. You don't have a 10-inch trend line right here against it. It looks like it's onto something. Volume is 10 times what it usually is on a daily basis, half a day. So volume is going to be like 20 times its usual. No, Sylvia, I would liquidate this on a pullback. This is a pure momentum play. Is this a very cornered stock? I don't know. It looks like a stock that had some amazing news come out. That's why it's up like crazy. Top strike is 35. There you go, Kip. So again, just saying, don't ever be afraid to buy stocks that are blowing out and start thinking, but it's going to go make a high right here. I'm going to sell it. I'm going to buy it back. No, don't do that. Don't do that. Don't do that. And again, do I know if the stock is going to continue? I have no idea. But on a day trading basis, the stock looks fantastic, especially if you think the market's going to go up a little higher today. All right. So again, just wanted to show you this stock. And if you don't think that I'm right on it, you know what stock you need to show everybody. Splunk. All right. So let's talk about continuations first. Now, the other thing I want to tell you, when I talk about these continuations, it's already gone up from 99 to 100%. I make it simple. Yes, because it is simple. All the charlatans and the snake oil salesmen make it very complicated. I'm making it very simple because I'm actually showing you exactly how it works without any of the bullshit, excuse my French. There's too much BS here. Too much BS, way too much BS. Okay, so here's what I wanted to say. I'm going to show you upside momentum stocks, and I'm going to show you downside momentum stocks. I'm going to show you stocks that are ready for action and stocks that are not ready for action. If a stock is not ready for action, I'm going to give you a price level. Don't forget that conveniently and buy a stock that's not ready, okay? And if these stocks don't move continuously over the next 24, 48 hours, get out of them. All right. So did I make myself clear, Matt? What do you think?
I think you were pretty clear.
All right. Oh. And by the way, it's sitting at the high of the day right now, 41.19. That stock, or it appears to be, or at a 40.80, like 30 cents off. Okay. Imperial Oil. Look at the stock market last few days. Good to know, Marie. Thank you. Thank you for that. Look at right here. Stock market is going down. This stock is going up. On a 3-month basis, even more relative strength. On a 1-month basis, look at this. This is 60-minute bars. This thing is exploding. 5-day, hey, look at this. Same thing. What about today? Well, look at this. S&P is going down. What are we doing while the S&P? So S&P is going down. What does the stock do? It's going sideways. What happens when the S&P hicked up a little bit right here? What happened? Do you guys see it? Do you see it with your own eyes? Tell me yes, because I'm going to stay here until you guys say, yeah, I see it. Market going down, stock is moving sideways. When the market just goes from the stock market literally goes like a little blip, what does the stock do? It makes a new high. So what happens if the stock market now goes up or continues moving sideways? Exactly. Let's look at options. It's very easy to find good stocks when markets are down. In this case, you want to go for the 55 strike price. That's expiring in 24 days. Let's go find another one. Some of these are not ready yet. So if they're not ready, I'll let you know. That's why I have more than you need, because some of them are not ready. Hey, I remember this stock. We talked about this stock the other day. Stock is doing great. What about today? How's it doing today? Well, on a daily, it's looking great. On an hourly, it's doing fantastic. On a 30-minute, it's killing it. And on a daily, no soup. So we don't want this stock right now. We don't want a stock that's moving with the market. We want a stock that's moving up while the market's moving down. Comprende? Next one, X. X marks the spot. I kind of like Twitter's old name. I don't know why they had to change it. All right, so let's look at it. Very good relative strength. Look at it on a 6-month basis. Looks really good here. It needs to break out. It's got good relative strength here. It's got good relative strength here. It's got good relative strength here. Today, not so much. Not so much. I would like to revisit this stock once it breaks above 3260. 3260. Write that down, 3260. Well, we'll see if it happens. It had an offer, but we'll see if it happens. It's still moving up. I like how it's hugging the 8-day EMA. It's not too far above the 8-day EMA. Exactly, Cyrus. We talked about this stock a few days ago. I know a lot of you took a position on this stock. I think we talked about it right here. It's been moving up, 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 up. Relative strength is amazing on a daily chart. On an hourly chart, still amazing. On a 5-minute chart, on a 30-minute, not good. And on a daily, no good. No soup for this. We want to see relative strength come back. It's going down right now. I want to see it going up. If this was going up, I would say continue holding it, Ray. When I said it right here, I said continue holding it. But not today. It's losing relative strength. You don't need to hold this stock. Stop thinking, when am I going to get in? What's my entry and what's my exit? The only thing you should be thinking about is where's your stop loss if you're day trading. The market will tell you when to enter, and the market will tell you when to exit. You're using relative strength. By the way, I forgot to give you the results. 72% of the people who took the survey yesterday who are not paying members of this group say they would pay if we started charging again for VIP. 72%, Matt. Not bad, right?
Not at all.
72%. All right, next one, learn. Stride. This looks good right now. This looks really good right now. Let's take a closer look. Ooh, I like it. Look at the stock market and look at this thing. It's definitely moving right. Let's look at it on a 30-minute. Oh, I like this. On a daily. Thank you, Adam. Yeah, not bad. Not bad. Not bad. Not amazing, but not bad. I would say if it breaks above 45.12, you got yourself a good one. Let me give you the option for this one. See, I'm giving you a lot of stocks, but I'm not giving you a lot of trades. This way you get to see a lot, but you get to kind of see what I'm looking at over and over. 44 strike price, $2. I wouldn't do the 45, even though it has open interest and liquidity. Do the 44. You can get this done for the middle for about 208. Okay. Next one. Let's see. It's going to be a lot harder to pick the short trades because relative strength is moving down today. This one is beautiful. Beautiful. That is beautiful. Volume, yes. Let me just pull it up here real quick. It's STNG. Volume is about 60% of its average day. So volume is okay. It's not crazy good. It's okay. Now let's look at relative strength. And you're not looking for a volume spike. You're just looking for higher volume. I mean, look at this. It made a swing high while didn't just stay up. It made a swing high while the market was going down on an hourly basis. That's impressive. 5 minute. I mean, why I keep saying 5 minute, 5 day, 30-minute bars. Look at this. Doesn't get much better, right? Let's look at today. Oh, yeah. Oh, yeah. Stock market's going down. What does this baby do? Goes up. And then when the stock market continues going down, it just moves sideways. If this stock market goes up, this thing will bolt higher. I would put a buy stop right above the high, which happens to be right at the 55.20-ish level around there. Let me give you an option for it. Here you go. You got 10 days to go. If it doesn't continue moving, and be careful with this one. Be careful with this one. It has high implied volatility. I would rather you sell an option. I would rather you sell the 53 or 52 and buy the 49 or 48 to cover yourself. It's a better trade. Implied is too high, and you don't have earnings for a while. And a lot of times these stocks start, by the way, I'm going to make a scan for you guys and I'll publish it one of these days, sooner than later. Write down what I'm about to tell you. It's important. I mean it. Write down what I'm about to tell you. It's important. So what you want to do is you want to always look at stocks 2 weeks before earnings. Why? Because it becomes like a magnet. Matter of fact, I think I'm going to call the setup magnet because stocks start to turn towards their estimates or away from their estimates. And I'm not suggesting you hold them through earnings. I'm suggesting you buy them about 2 weeks before earnings and liquidate them right before earnings. So it's a trade that looks for stocks that are gravitating towards their expectation. It's a very high probability trade. I'm going to start scanning for those in the VIP room and in the day trading room. I hope you wrote that down. I just gave you a really good setup. I hope you guys wrote down what I just said. Does anybody have any questions about what I just said? Sometimes I say things very fast and I don't put a lot of importance on them, but what I just said was very important. You guys got it? Has everybody got it? I gave you a big nugget right now. I gave you a golden nugget right now. Sherry wants me to repeat it. Sherry, stocks start drifting towards their new earnings estimates 2 weeks before earnings. You always need to look at stocks 2 weeks before earnings because they start moving either towards or away. They start becoming like a magnet. Okay, 2 weeks. Always look at stocks between the time 2 weeks before earnings up to the day of earnings and start seeing if they start gravitating and trending. The Sting suggestion was to buy a bull put spread. Thank you for that, Don. I appreciate it. No, I said a put. Oh, sorry. I was on the call side, I think. Put right here. 53 or 52 and cover it with a 48 or a 47. No, I didn't say to buy 2 weeks before earnings. I said to start looking at it. And if they're starting to trend towards, like really starting to trend, that's when you buy them. You start looking at stocks 2 weeks before earnings, but you liquidate the day before earnings, Bruno, not the day of earnings, the day before earnings. It's too late if you liquidate the day of earnings. If they're at night, you can liquidate them in the morning. But if they're in the morning, you want to liquidate them the night before. All right. I'm glad we got folks listening here. Let's continue. I know I say a lot, and I know I'm trying to get a lot into your head here, and I know it's a lot for a lot of you, but I'm giving you guys the most up-to-date trading information that you could possibly find, and I'm skipping all the BS. Please pay attention. We have to ask for the expectations. Norbert, expectations of what, Norbert? Let me continue. ACGL. And Matt, I'm going to bring you into this too. You know, there's a program out there, I hear, a rumor that there's a program called Amy Broker, and Amy Broker can give us a list of every stock that's coming out with earnings in 2 weeks. Did you ever hear of a program like that?
Have.
And you and I can have a list every day of those stocks, and we could start looking at them and creating a list for ourselves. Oh, I love it. Yeah, Oh, yes, exactly. Yeah, Cyrus, it's probably take Matt 3 minutes. He'll probably have it done before we're done with this program, before we're done with this class. But it's always good to have a list of stocks 2 weeks into earnings and looking at that stock every day. And you will see that some of them will start creeping up towards expectations. You can also add a little filter, Matt. Can I give you a filter? Here's the big one. Want to find all stocks that over the last 10 years beat their earnings 75% of the time. So the stock has to beat earnings 75% of the time, and earnings are 2 weeks away. Got it?
Yep.
So let's talk about Arch Capital. I'm giving you guys some freebies here. Nah, just stuff we've been doing that for a long time. We just haven't talked about it. Sting, I gave Rochelle for Sting. I gave the put spread. So let's look at Arch Capital. This is amazing trend. Look at this. I don't know. I mean, this is fantastic. This is beautiful. Hugging the 8-day, saying, you know what, to the market. Can somebody write to Valerie the system? It's a very complex system, Valerie. Very, very complex. Very, very. No, if nobody repeats it, I'll repeat it. Let me just go through this one real quick. So on a 1 month, Valerie, we look for stocks that historically outperformed earnings 75% of the time. And then we make a list of those stocks that have earnings in 2 weeks, and we start monitoring them. We should probably call those magnet trades, right? Because they tend to, like a magnet, go towards the earnings estimates. Okay, Arch Capital. There you go, Dickens. Thank you. Thank you. Dickens, if you ever want to be my personal assistant, you got the job. So look, going up, going down. 5 days. Ooh, it's going up, not just going up, it's matching this high here. And its market is still going down. What about today? Not bad. Wasn't pretty in the beginning, but what happened when the market took off again? Come up here. If it takes out the high today, 82.10, you want to go long. I'll give you the option. If it doesn't, don't. 24 days later, we got 80 right here, 80 strike price right there. Let's continue. Last one. No. Going with the market today, so no soup. I don't blame you, Dickens. I don't blame you. Okay. Now I'm going to give you shorts. Now for these, we want to make sure they're underperforming the market, and we want to make sure they have higher than average volume. So I'm going to be checking volume on these. So first one is Lamar, the advertising space. Now, if the economy is slowing down, Lamar is not going to do well. Let me see how volume is here. Now it's definitely underperforming the market. It made a swing low. Volume today is no volume is only 40%. So it's just average volume. Price action's good. Let's see how it's doing here. Matching the market, matching the market, matching the market, matching the market. Not one way or the other. A stock to watch. We'll keep an eye on this. If you do want this one, let me give you the option for it. 85 strike price, expiring 10/20. Next one. Isn't this a shirt company? Van Housen? I think they're a shirt company.
Don't they make like razors and stuff?
Oh, okay. Okay. Oh, they were a shirt company. Last ticker was LAMR. Don't like this one. I liked it this morning. I don't like it right now. Man, what a rain, huh?
Mm-hmm.
Started pouring here. Yeah, I think I still have a couple of their shirts. I think they merged with Izod. I think they merged with Izod. I really do. I think my wife got me a couple of their shirts that don't get tucked in. That's how I remember them. But I don't like the stock right now. Men's clothing, yeah. Nah, it doesn't really have anything great. And let's look at volume. Volume is a shirt for me, right? Oh, it's taking forever. Thinkorswim is taking forever to load today, Matt. Oh, we'll see in a minute. But so far, I'm not seeing much love here. Let's go to the next one. Here it is. Volume on this stock today is no, forget it. It's only 24% of its average volume. You don't want this. Yeah, Mark, same problem, huh? Yeah, real slow. Vodine, you're hilarious, man. That's funny. Yeah, no soup for me. All right, next one. Shopify. Let's look at Shopify. Oh, interesting. So Shopify is breaking the 200-day moving average. Volume is 46%, so it's nothing crazy. It's not really that high. In terms of its strength, yeah, I do. I do. I do. I do. Valerie, I do. Ask me later and I'll give you a couple. Okay. But I could tell you that Robinhood is the biggest one. The biggest one. They're like, they invented the game. Just ask me later and yeah. And it's looking great. But the volume, see, I'm not seeing anything good with volume here. Matter of fact, volume is slowing down. I'm not seeing this move being very legitimate. So I'm not gonna, we got to be very careful with our shorts right now. If volume is not crazy high, we got to be really careful. We could tell to the upside what funds are buying without volume being the biggest clue. But to the downside, if relative strength can't really help us because it's moving in the same direction, we need to we need to have a legitimization of volume. Etsy, let's look at Etsy. Yeah, it's true, Frank. The worst thing they could have done was go public because it exposed everything. So Etsy is making a new swing low, and I actually like Etsy. Let's see how volume is. Volume is 50%. So nothing crazy. And we're about halfway done with the day. I think out of all of these stocks so far to the downside, I think I like Etsy the best. Yeah, I like Etsy the best. I would do Etsy. Carol, Cost and Nike have earnings tomorrow, I think. And I gave you a trade, I think, for one of them this morning, didn't I? In the morning video? Could have swore I talked about one of them this morning. If you remind me, I'll bring them up. I'll bring them both up. But I think earnings are coming out. I was so sad to hear that because being on the go so much for my business. Yeah, it is, Valerie. It is. Thursday. All right. So for this case, yeah, I would be careful. I'll talk about Costco. Just let me finish this and I'll talk about Costco. I'm almost done. That's Lance's thing. That's Lance's. Now, options are very, very expensive. So we don't want to do a bull put. We don't want to do a bull put spread. We want to do a bear call spread. So what we would do is we would at 62 right now. What I would probably do is I would go out about 10 days. I would I would sell the 65 and I would cover it with a 67. You've got about 40 cents here on $2. It's about 20%. It's not bad. So again, you go to the call side, you buy the 63 or maybe 64 and you sell it against a couple of strike prices out. Nothing crazy. Yeah, I'll talk about Costco in a minute. I gave you guys a day trade in the morning video on it. Next one is ADI. ADI. Put it in here, see how volume is. No, volume is crap on this stock, and I'm not liking it. Forget it. Don't even like how it looks. I don't even know how it made on my list. All right. Let's look at Lilly. See what the volume is on Lilly. Volume is about 54%. It's got good volume. It's got better than average here. EL, not Lilly. EL, wrong ticker symbol. EL, not Lilly. Let's look at the premium, kind of premiums. 32, not so great. 24 days out. Yeah, we don't want to be in calls for 20 something days. I'll take a look at it in a minute, Cyrus. On the put side, I would be buying the 145 and selling the 130. Be careful to the short side right now. Be very, very careful to the short side. Okay, QSR. Stock is breaking down. It had some really high volume a few days ago. I am, Paul. I am expecting a little bounce, but I'm not sure if this bounce is going to take us where we need to go. The stock has no volume today. Let's wait for it to break a little lower. I want to see the stock break to the 66 level, below the 66 level, to the downside. That's why I'm only picking breakdown stocks that can carry the load on their own without the market. And right now, be careful with shorts. Be very, very careful with shorts. One last one. Management. Let's see. Same thing. We need to wait for it to break low. We need to see this below 155. I hope as I'm talking, you guys are putting stops right here, alerts right here. Okay. Very, 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 very important. Now, let's talk about, for a second, before we get into seasonality, let's talk about the earnings today. Costco, right? Costco has beat their earnings for the last, Costco has beat their earnings at least the last 75% of the time. Pretty confident in that. Matter of fact, let's take a look right here. I'm pretty sure that it has. I'm pretty sure that this stock has beat their. I mean, we could easily find this out on a test, or I can go further and look, but I'm pretty sure we could. I don't think so, John. So, Costco. What has Costco been doing for the last 2 weeks? Comprende? 75% of stocks beating expectations. We're not the only ones that know that. Hedge funds know that too. What does the market maker say? Market maker says that when they've been buying the stock up for the last 2 weeks, look, like a magnet. So I always say, look at stocks 2 weeks before earnings that are outperforming the stock market. So here's what I said this morning. I said, watch Costco very, very carefully. If it takes out the high of the day in the morning, get into that stock. If it doesn't, don't do anything. In other words, if it starts moving towards the end of the day, do it, but it's not. It's moving down. It's not moving up. It's moving the other way. So there's no soup there. How do you filter for stocks that beat earnings 75%? With a program like Amy Broker, which we have. We'll just start posting lists, I think. So next one is Nike, and that's coming out with earnings after tomorrow. And so far, I'm not happy with how Nike's looking. It hasn't been really doing all that well. And if the Foot Locker hasn't been doing all that well, as a matter of fact, they tend to move together. I don't either, Cyrus. I don't either. Yeah. See how they're very similar, very, very similar. So I don't think we're going to get much love from either of these. Please listen to me carefully. Don't take trades into earnings. If you have earnings coming out at night, you could take a trade in the morning and get out of it before it closes. If earnings already passed and the stock is doing something technical, you can get into that. But if there's nothing going on, there's nothing going on. So before I give Matt the floor, look at Sienna. It's breaking the 200-day moving average on the way down. Let's look at hold on a second. Let's look at volume. It just got on my list. No. Volume is only 22% of its daily volume. I thought this was good. Always look at stocks that open above the 200-day moving average. And I'll give you a link, Valerie, or just here, amybroker.com. We've been using it for the last 2 years for all our swing trades. There's also services that do it, Valerie. You could find that information. It's not hard. Just old Bob. Here we go again, just old Bob. Bob, I figured it out. You're not subscribed to my Telegram channel and you don't read my updates. Am I correct in saying that? Is it fair to say that's the case? Bob, we got out of Carvana. I wrote several long notes about it. We're out. We were out yesterday. Please follow the Telegram channel. Please follow the emails, and please follow the alerts. Okay, so what do you want me to comment about it? The stock is, let's look at it right now. The stock went down even more after we got out. It's down $1.29. That's that. Can you text us when you give a call on Telegram? No, Frank. No, Telegram is like a text. Why would I do that? Why not just have your Telegram? So Sienna, wait for volume to pick up, but I think the stock is going to start filling this gap. You see this? There's a lot of space here. A lot of space here. Keep an eye on this stock. Can you email Lori by the time well, let me give you an example, Lori. This morning, let me show you. And you're going to answer your own question. Here's Lori for the problem. I know it's a big inconvenience. Thank you, Frank. That's what I thought too. Matt, did you see what Frank just said? Mm-hmm. There's so many updates on Carvana. I can't. How many more updates can I give you? So let's talk about Oracle. This morning, Lori, this morning at 10:01 a.m. Let's see, 10:01 a.m. right there, right there. I gave you an alert to sell Oracle on Telegram. Folks who sold Oracle did really, really well. If I would have sent that to you in an email, you would have gotten it 15 minutes later. 50% of your gains would have been gone. In light of what I just said, do you still want me to use email instead of Telegram to send you instant alerts? I could do it. You'll miss all your trades. You would have missed the Tesla trade yesterday. You would have missed the FedEx trade yesterday. You would have missed my Target trade from yesterday. Ben, didn't you just hear what I said? You're going to miss all that stuff. You're going to miss it. Now, for my swing trades, I always put it on emails. But for the free trades that you guys don't pay for, I could put them wherever I want. And I'm going to put them on Telegram. I do, Ron. And if they're not a day trade, I put them on an email. But if it's a day trades are only going on Telegram. Ben, how about you sign up for Telegram? How about you go and sign up since it costs nothing? How to get Telegram. Marie, here's a secret password for you. Go to rogerscott.com/Telegram and press the button once you've signed up for Telegram and you're registered. It's free. There you go, Franco. So yeah, I don't think I'm going to be changing anything actually, except giving you more of what I'm doing. And if you guys don't want to get free Telegram on your phone, well, that's on you. Yeah, no problem. All right, it's free. And I'm not asking you to pay for anything. It's free. It doesn't cost anything. That's right, Valerie. Good point. Yeah, just sign up for Telegram and then press the link in my Roger Scott /Telegram room and it'll automatically subscribe you. And I have not seen one person unsubscribe to my Telegram that's not happy with it. People are very happy with it because I don't spam you. I don't send you a bunch of bullshit. Excuse my French. I only send you good stuff. Now, Matt, can you take us through seasonality?
Yep. Sure can. All right, my screen should be showing. We'll start at the sectors as usual. You've got your 11 sectors. This is to the long side. The best looking for seasonality is financials. You've got 17 trades, 82% win rate, 2.68 profit factor. Consumer staples are still decently strong. Accuracy is not as great, but seasonality is okay there. Healthcare is accurate, but the profit factor is just doesn't make the trade really worth it in terms of the system. On the short side, go. There's not much at all. Really, there's nothing. Yeah, I wouldn't recommend any of that. Let's go back to the long side real quick. Top setups. ABT. Hard to argue with that. 23 trades, 91% win rate. You've also got Schwab, Frost, Moss, FI, all high trade, all high accuracy to the side. And remember, this is using a system. So you get into this trade using the same parameters as this test. You get in at the end of the day or by the end of the day, and you would get out when either the close takes out the previous day's high, or you've been in the trade for 10 days. You want to get out. You got a few more honorable mentions down here too. Definitely favoring the long side this week. On the short side, not as pitiful as yesterday. Not a lot of trades here. Intap looks okay, although that profit factor is not good. Scratch that. Not a lot of trades. Got TSN, KLAC, MGen. Not a ton of trades after that. As far as the sector trend, A lot of consumer discretionary on the short side. And on the long side, it's very mixed still. Not a lot to tell from it. And lastly, your 10-day hold, which is just buy today, get out 10 days later. Very in the middle on the sectors. No bias either way. On the long side, these are decent. You don't need the accuracy to be as high because it's a lot more difficult because there's no system involved. It's just a straight buy and hold for 10 days. What about that's to the long side? To the short side, we just flip it over. The bond, very short.
Yeah, well, the bond, boy,
That'd be 93.33% accuracy, 15 trades. 93 and a third. I could have said that like a normal person. Other than that, yeah, that's pretty much it.
I got one thing to say. Folks, take a look at Microsoft. It's sitting right now at a support level at 310.80. If Microsoft breaks this level with some volume, and right now it has 60%, if Microsoft breaks 310.80 on a good volume, it's going to go to 295. With that, we will leave you alone. If anybody has any questions, you guys know what to do. Roger@rogerscott.com. Sorry for going a little late, guys. Have a great day. Bye, everyone.